Have you ever stopped to think about why investors like Warren Buffett managed to get through the biggest financial crises in history and come out even stronger? Today, I want to explain to you one of the big secrets behind this ability. And to do that, let's take a look at a classic example, the 2008 crisis. At that time, the collapse of the American housing market triggered a domino effect that brought down banks, companies, and millions of families around the world. But while many were panicking, Buffett stayed calm. Why? Because he understands that major financial crises don't happen overnight. They are the result of years of excessive behaviors, such as speculation, reckless leverage, and decisions made without proper risk awareness. Buffett always analyzes these signs before the situation becomes critical. He knows that when the market is too euphoric, it's time to be cautious. And when everyone is afraid, that's the moment to act intelligently. Throughout this video, I'm going to show you how this mindset helped Warren Buffett not only survive the 2008 crisis, but also seize the opportunities that arose from it. And most importantly, how you can apply these principles to your own financial life. Let's get started. To understand how Warren Buffett acts during a crisis, we first need to understand how these crises are formed. Financial crises, in general, are not accidents that happen overnight. They start slowly, often during years of a market that just seems to keep going up. That's when optimism turns into excess. People start investing without properly assessing risks, believing that prices will only continue to rise. Banks and companies become over-leveraged, meaning they take on more debt than they should, betting that future growth will cover the costs. But eventually something happens. A default here, a bankruptcy there, and the house of cards begins to collapse. That's exactly what happened during the 2008 crisis. Banks were loaded with high-risk assets based on mortgage loans that should never have been approved. When those mortgages started defaulting, the entire system collapsed. Now, the key point is this: Buffett doesn't try to predict exactly when the collapse will happen. He doesn't bet on perfect timing. What he does is prepare in advance, staying disciplined while everyone else gets greedy. And that's what makes all the difference. A classic example of how Warren Buffett acts came during the 2008 crisis. While most people were panicking and selling everything they had, Buffett remained calm. Precisely because he had been preparing years in advance, he kept a massive amount of cash on hand, patiently waiting for the right moment. And when the opportunities appeared, he stepped in and bought high-quality assets at huge discounts. One of his most remarkable moves was when he invested $5 billion in Goldman Sachs, right at the peak of the crisis when almost no one wanted to go near the banks. He structured the deal smartly, receiving preferred shares that paid a guaranteed dividend, plus warrants to buy additional shares in the future at very low prices. In other words, he not only protected himself from the worst, but also positioned himself to profit massively once the market recovered. While many were focused on short-term fear, Buffett was focused on long-term logic, buying great assets with a margin of safety when everyone else was afraid. And it was exactly this mindset that allowed him to come out of the crisis much stronger than he went in. What can we learn from this? That to survive and even thrive during tough times, you need to follow what Warren Buffett does, not what the majority does. The majority panics, sells at the bottom, and destroys value. Buffett does the opposite. He prepares before the crisis, maintaining a strong cash reserve. He understands that crises are not the end of the world. They are hidden opportunities for those who know what they're doing. And most importantly, he acts with discipline, patience, and a long-term focus. If you can apply these same principles to your life and your investments, you'll realize that while many are struggling just to survive, you'll be positioning yourself to grow. After all, as Buffett himself says, be fearful when others are greedy, and greedy when others are fearful. If this content helped you in any way, don't forget to like the video and subscribe to the channel to get more lessons like this one.